Imagine running a fleet of taxis. Some are small, some are electric. Some can drive all day, others need to stop and recharge after a few hours. Every morning, you decide where to send each car, airport runs, city centres, surge pricing, knowing traffic, weather and demand will all change by the hour. Now imagine doing that, not with taxis, but with 5 gigawatts of batteries. Our guest today is Fabrizio Fenu, who leads battery route to market and optimization at EDF Wholesale Market Services. In Britain, EDF already has 2 gigawatts of batteries live under management, with 3 gigawatts more due to energize by 2028. At the same time, the projects themselves have changed. What used to be a 20 or 50 megawatt site are now 100, 300, or even 500 megawatts. So what does optimization actually look like at that scale? This episode is about how battery revenues are really made and who is optimizing these massive storage systems. I'm Ed Porter, welcome back to Transmission. Hello Fabrizio, welcome to Transmission.
Hi Ed, thanks for inviting. I'm a bit nervous about being here. You had such great guests in all the life of the podcast. I'm really humble. Thank you.
And let's continue that tradition with another great guest. So could you introduce yourself and your company?
My name is Fabrizio Fenu. I'm the head of business development and account management services for EDF business and wholesale market services.
Okay, and EDF is massive, right? So what is your area and what do they do?
So in our area, we trade energy in the real-time market in the short term. In particular, the area I work with, we trade the energy for batteries. So we trade energy and we optimize batteries. Now, that team has a wider scope because obviously being at EDF, we trade energy in the real-time market, also for the energy that we procure from renewable, the energy that other supplier can, they need to trade it. That's it.
Okay. And then go into, so are you optimizing just your own assets or are you optimizing another party's assets?
We optimize mainly third party's asset, but we optimize also some asset owned by EDF Power Solution, which is a separate company of EDF investing in their own portfolio. They're a significant partner, but it means for us about 10% of our fleet.
Okay, and 10% of your fleet. So let's give listeners some idea of like how big that fleet is. So how many batteries have you got that are currently running and how many batteries have you got under contract that are soon to deploy?
At the moment, we have contracted about 5 gigawatt of batteries. About 2 gigawatt are already live, which means it's about 20% of market share. The remaining part is going to be energized between now and 2028 if everything goes as planned and there are any delays, because in this industry there are no delays, never.
That like of course that is the biggest portfolio under management, right? So let's just talk about that. So how did you get there? What do you think the secret sauce has been in terms of being able to put that portfolio together?
Well, we started in 2018. At that time, we were doing some testing with a battery. It was very small, 50 kilowatt, installed in one of the EDF facilities. And we kept it, obviously, we couldn't do an ancillary service with a battery like that. So we kept it to test wholesale market. At the time, revenues in the battery space were coming mainly from ancillary and FFR or firm frequency response. But we wanted to prove the case for the wholesale market. So we, and how the battery work with the wholesale market. So we started testing with this small asset. From the time we started to onboard commercial asset, the first one was a co-located 10 megawatt battery and solar. And after that, we expanded the portfolio quite quickly.
And that's a big step up, right? Because like 50 kilowatts is like 15 to 20 kettles worth. It's like that's tiny.
Yeah.
And then 10 megawatts
more than
is,
a mobile.
Yeah, exactly. Is then just a massive step up, right? And then you're into the commercial optimization. You're doing this for real, for big sums of money.
Yeah. Imagine like we grown with partnership with several investors. We went quite wide with the number of people we were dealing with, instead of focusing only in a very deep relationship with one counterparty or another. Also because at the time it was not easy to understand who would have grown the most. So we partnered with many players. Some have grown massively in the meantime. If you think how have grown, like it's been a significant journey also for us together with them.
Agree. And let's just give some context to this, right? So you've got these partnerships in place. If I'm someone who, this is the first time I'm hearing about batteries and optimization, firstly, welcome to Transmission. You're going to find a lot of this content here. But secondly, like when they walk into the trading like room and the trading floor, are they going to see sort of one algorithm working away in the background, sort of seamlessly solving everything? Or are there still those sort of energy trader heads like working away, hammering keys, talking to people all the time around what's happening in the market? Like what's the balance?
It's a bit of a mix of different functions. So we have created a platform called PowerShift, which is a mix of capabilities, trading capabilities, software, operation capabilities, asset management capabilities, because all these elements are important then to extract the revenue from the batteries. If you walk into the trading desk, you will see obviously where there are the traders, this massive screen with a lot of information about the market and all the volume that moves around. The algorithm, you don't really see it because obviously it's embedded in the machines. In terms of structure, there is operation team, making sure that the asset has the right characteristic and is treated respecting the right characteristics. And there is an optimization team making sure that with the right characteristic, we maximize the revenue.
And I think I did cut you off a little bit earlier around how you built up that portfolio, just in terms of how you got to the size. So we talked about the very small site. We then talked about a sort of 10 megawatt co-located site. Then we talked about making partnerships and that's starting to grow. And some of those groups have gone really big. But it feels like there are still some holes in getting to 5 gigawatts contracted. There still feel like there are some big chunky projects that you had to win. So how are you going to get those big contracts through the door?
So I think it's fair to say early days, 2018, 2019, 2020, batteries were from 20 to 50 megawatt each.
Yeah.
Then there has been a change in the regulation, in the application for the planning, where you could actually go beyond the 50 megawatt without a lot of extra admin work. So people took the chance to actually go bigger on some projects. And we started to see the size of the project growing. It's also fair to say that early days, we were doing pretty much 50-50 between floor agreement and merchant agreement, with the size of the project getting bigger and probably project financing requirement or some equity requirement. The investor wanted to have more revenue certainty, so they contracted with EDF or other companies that could provide that revenue certainty even more. So it's a mix of working with many different investors and the project that they were developing and building getting bigger and bigger. Today, the largest we have contracted is 500 megawatt. To give you a scale, it's huge.
2-hour system?
In that case, yes. But we start to see also like 3-hour systems and 4-hour system. So this market is changing quite quickly in terms of the configuration of the site.
It's really interesting. You've got the sort of, as the sites get bigger, the type of people that finance those sites go from being the early stage enthusiasts who might have a lot of equity they were looking to put in, but actually you're starting to get the infrastructure funds coming in, people who want to put debt into projects. And when debt turns up into projects, the only thing they want to know is, are they going to get repaid? And so if EDF sits behind the project and says, I will put a floor in place that will make sure you get £40,000 per megawatt per year. That for them is like, they can kind of get behind that, and that allows them to put more debt into these projects, which makes the cost of financing cheaper. And so just to kind of explain that for listeners, that's
totally right.
That's the process going on. I think
in certain cases, it's also worth to say that sometimes it's even the equity. So So it's not necessarily because of the debt. In some case, the investor it's himself require for preferences bottom in terms of revenue, and in that case, we are happy to provide a floor.
Yeah. And we've kind of snuck into the conversation, right? That you take merchant, so there is not a sort of underwritten process in that contract, and so the revenue could be anything. It won't be anything. That's not how markets work, but it could be in theory. And then you've got the floor. So essentially, EDF is saying, right, there's a floor to this. So if the revenue goes below that floor, we'll top it up.
Yes.
There's another type of contract out there, which is a toll, and that is effectively when you say, look, we'll just take all of the risk for the asset and guarantee you 100, like whatever the number is. You like the first two, but you don't like tolls. Why is that?
First thing, at the moment.
Okay.
You never know. It can be that we meet in 6 months' time and maybe we have changed our preferences. But at the moment, so we started offering merchant and floor. We think it was a very solid offer. It's quite simple to understand. And we are happy at the moment to work in that way. I think there is need for tolling because I recognize in some negotiation with some counterparty, even on floor, they want certain kind of certainty and guarantee that we can't offer. Mm-hmm. The floor is okay, but it gives you certain guarantee. It allows you to capture high revenue when they are available, but it's set in a certain way. If you need the kind of guarantee that a tolling provides, then you need to go for a tolling. But then you need to give up the higher part of the revenue when they materialize, obviously. No, so you need to choose which kind of commercial configuration you want. Now, the beauty of this market is that even today, there is space for everyone. People are still contracting on merchant, are contracting on floor, they are contracting on tolling. And I only see a new player actually coming to the market and offering these products. Mm-hmm.
I'm not sure there is space for everyone. I think that gets said quite a lot. And it's said quite a lot in the battery space as well. People say stuff like, we need all technologies, or we need all types of storage. And I think maybe like 10 years ago, some of that was true. Like we needed to see and kind of find out, which techs were coming through. If I fast forward 10 years, I think about like who are the entities who can actually provide like a floor contract or a toll contract. Like it's actually not everyone. Like it is, some of the big players are going to have to do it. You have to have 100 million or $1 billion in your balance sheet, right, to be able to do this.
I agree with that. But if you think like 2018, there were probably 5 route to market providers, including us. Mm-hmm. Not more than that. And probably 4 of them were software techie company that then have been bought little by little by or bigger fund or utility.
Yeah. For example, Kiwi Power, NG.
Yeah. Or one we've seen probably last week.
Of course, Flextricity were sold from Quinbrook, an infrastructure fund, to Drax.
So I think that there has been a kind of natural consolidation of the market. Mm-hmm. But if I look at the number of other players that came in providing floor or tolling, well, that number has increased quite a lot. Now, obviously, when you provide a tolling, probably it's easier for a new entrant to come and say, I'm happy to pay this amount for your asset, no matter what I do with the asset. If you offer a floor, that conversation is more difficult because you need to have proven track records. Fortunately, we have, because we are trading since 2018, so we are in a good place for that. But I think that is particularly important. The performance when you have a merchant or a floor agreement are really like the most important thing.
And there are other ways around this, right? So to disagree with myself around like it being a closed market, there are some tech providers who are able to go and find another party who can help out on like providing some security. So there are other routes. It just gets more complicated.
It's more complicated.
And I think we'll see this in other markets as well. So I think GB is quite far ahead. But then we go into, say, Germany, for example, all of a sudden, I think these questions are going to start to be asked quite quickly in terms of who can actually put together a really compelling floor or toll offering, and can they actually back it up? Because those credit risk teams are on the ball. Okay, let's move on from that, and let's talk a little bit about one of the major themes in energy and I think broadly across the sort of working world, and that is sort of the use of AI. I'm really interested to kind of look a little bit under the bonnet of EDF. How do you think about AI? When you walk past the trading desk, do we see sort of ChatGPT, Claude running away?
There is a robot. There is actually a robot.
There's an official robot that's doing it.
The humanoid actually doing the trading. Well, we love AI, we love algorithm because they help a lot making this work better. They reduce the possibility of mistakes, of human error quite a lot. We still don't believe in the fully algo or 100% algo only way of managing the trading.
So you've got a human in the loop always.
There is a human in the loop, yes. But we use AI and algorithm in many different elements of the chain. We don't give away too much, but we use it on price forecasting. We use it on the optimization and re-optimization of the asset in the intraday. We use it on certain pricing for certain markets. So it's heavily in the mix of generating the value. We don't believe it can be done only by that.
Okay.
Also because who procure the ancillary services or the energy, who is on the other side of the trade, is not a perfect algo. So it's very difficult to have an algorithm who can, or even if it's driven with machine learning, that can learn how the buyer behaves, especially in a context where it changes every year. You have new services every year. You have new composition, new generation mix every year. So we don't think it perfectly applies yet. But it's becoming more and more present in all the chain of generating the value.
So this may be a little bit of a leading question, right? But let's look at Fabrizio, age 16, and say, if you were to give him advice, knowing what you know about how the workplace is changing, the tech is changing, you've seen under the bonnet of this, right? So what advice would you give to Fabrizio to get into the trading world or the origination world?
Stop everything you're doing, go learning writing and coding, and go work for a hedge fund.
Okay.
This would be my advice. But,
and if there's a burning passion to get into energy?
Well, I believe that a lot of them are actually into energy. So it can be used, but still better to work directly for them.
It's interesting you say coding, right? I feel like it's becoming less a valuable skill. So the better, the better things like Claude become, the less you need to know this. And so perhaps it's more like being very familiar with those tools that's such a critical part of how some of these trading floors are going to work in the future. I
agree, but I'm not too sure. Like looking at the the job market, like I have a lot of friends working in the coding industry, in the software industry. They're doing all right.
They're doing okay. Okay. So let me ask a question that I think gets asked all the time to originators, which is, how do you ensure that my asset gets, let's say there's a really good price out there. How do you make sure that my asset gets a good price?
I don't know if to really thank you for the question, Ed. Yes, no, you're right. So we get this question asked a lot. I would say that people are always very concerned that we treat them fairly. They don't want to be overlooked. Is it English?
Overlooked. But that's totally fair, right? So you have all these trading screens, you have all these traders, you know so much, and they are experts in asset development, and they've just kind of brought it to the point where it's operational, right? So you can see where the balance or the sort of you hold all the cards.
So let me try. Can go a bit technical here and there, but let's see. So first thing, not every asset are the same. In our portfolio, there are some very, very early days, 30 minutes asset, some distribution connected asset, transmission connected asset, some 2 hour, 2 hour and a half, 3 hour. Some asset that can run 1 cycle and a half per day, some asset can run 3 cycle per day, some asset have warranty condition, like just yearly maximum number of cycle.
And so when you're then like working out the price for those, they're sort of set they're distinct by price anyway. So
Yes.
so you kind of know which order they go in.
Yes, we do the strategy per each asset one by one, taking into account the asset characteristic. This is a couple of days before the delivery, okay? So the asset characteristic drives what are the cost opportunity of each asset in each market in the hypothetical world that the strategy, the optimization team sees a couple of days before the delivery. Then we enter into the delivery the day before, we bid on day ahead and ancillary services, and these start to generate the profile of the batteries. And then we complete the optimization of the battery for the other time where we didn't lock the battery at the ahead stage, operating them into the intraday market or balancing mechanism or cash out, subject to each site configuration.
So
Coming back,
well, let's just pause there, because there's a lot of things that have just kind of come through. So the day ahead market, that's got a lot of volume in it. That's where a lot of the energy market in the UK balances, and so there's plenty of volume coming through. So in that case, probably quite straightforward.
Yeah. So in that case, for example, you probably don't even need to think about which asset will get this megawatt, because in reality, there's enough liquidity for everyone.
Let's do ancillary services.
In ancillary services, it's more shallow. That market is a bit more restricted. But again,
there are fewer gigawatts being procured.
Yes, but the volume changes every day. This is where the asset characteristic also have a role. If you have a 1 hour duration battery, you will price yourself out or too high on certain services in terms of pound per megawatt, because certain services requires the battery to behave in a certain way and have a certain element of capacity instead of the power.
Yes.
Where if you have a short battery, it's better for you not to bid for those services. So you will orient the strategy towards the other.
The service requires you to hold buffers on either side. And so if you're like an hour system, it's very hard to be able to bid competitively. Whereas if you're a 2 hour, 4 hour system, the buffers are relatively smaller portions, and so it's easier to bid competitively.
Potentially, yes. But at that stage, the optimization team also check what is the cost opportunity to stay into that service. So when they do the strategy, is an evaluation of the asset characteristic and the cost opportunity that asset with that asset characteristic has in all the markets, and they price all the markets with that. Okay. So in day ahead, you wouldn't see problem of liquidity. Ancillary, National Grid has become much better in buying ancillary services and make sure that the frequency on the grid is balanced, so that we avoid bigger problem. They've launched something that's called EAC in the slang.
Which is the enduring auction capability.
Yes.
Very exciting.
Yes, it's fantastic. Now, when it has been introduced, the price has plumped a bit. Which is bad for the battery, great for the community, because it was a way for NISO to actually manage in a more efficient way the grid. So it's been a great achievement.
So one example would be, they have two exactly the same services, or pretty similar services. One is 10 megawatts short, so needs 10 megawatts, and the other one's oversubscribed by 10 megawatts. The way it used to work is that NISO couldn't move 10 megawatts from one to the other. The way the EAC works is that you could now say, actually, I can see I've got 10 megawatts over here that's really cheap. I'm just going to move that over, and there we go. And all of a sudden, clearing prices come down, as you mentioned, and that's good for consumers, right?
Absolutely, yes. And what I find fantastic is that this happened because the trader, the route to market provider, can set certain baskets of offers. So that is not sending anymore just one price for one services, but can send up to, I think, 25 basket per each asset, which means you provide the operator with a lot of optionality on how to use your asset. And then it's NISO actually defining what is the best basket for the needs that they have. Yeah. So again, coming back to your question, NISO is making that decision now on which asset to pick up.
So you create the prices, but NISO, the system operator, is essentially selecting one.
Yes.
You're doing very well so far, but let's get into intraday and the balancing mechanism, because I think this is where it gets a little bit more spicy.
It gets a bit more spicy, yeah. So the balancing mechanism, again, relatively easy. The route to market provider will provide a price to charge a bit or discharge a bit, or charge a bit less or discharge a bit less. So
you always give like bid offer pairs, right? Yeah. So to go up or to go down, that allows the system operator to know what the price of flexibility is in either direction.
Perfect. And all this is perfectly transparent. So when we bid in balancing mechanism, obviously we provide National Grid with information about when we plan to do our charge, our discharge, and what is our price for being to modify our behavior, whatever NISO can require to charge a bit more or discharge a bit in certain situations to deviate from what was our baseline. All this information are public, so every customer can actually then challenge us, asking why my asset had this strategy while another had a different strategy, and we're very happy to explain the reason behind. Typically, it will go back again to asset characteristic, potentially asset utilization, and other element of the trading strategies.
Okay, let's go on to intraday.
Intraday is in reality the only element where you don't have a perfect visibility, because it's not. I don't believe it's fully transparent somewhere.
Yeah. So someone who's trading intraday will see a screen and they'll see a load of offers, like 5 offers that will have slightly different prices, and then 5 bids that will have slightly different prices. And you could you could hit the offer, you could hit the bid, or you could wait to be sort of taken. But there's not sort of 10 gigawatts going through in one go in the same way that happens in day ahead. Often it's like a 50 megawatt trade.
Yeah. And potentially you have 2 ways to work in that scenario. Or you can trade allocate, so you can directly allocate that specific trade that happened, that single megawatt hour, from one counterparty to another at a certain price. Then you will get the challenge of, I'm the customer, have I got the best trade in your portfolio, or you gave me the bottom one because actually I negotiated a very cheap price with you? So we have bypassed all these. We had in mind since day one that we wanted to go big. So we have created an index. So at the moment, at the intraday, we settle on the basis of an index. All our customers get one single price per the half hour. Is the way we found to make sure that it's absolutely fair between the team. And we take some risks because we can potentially trade better than the index. We can trade worse than the index. It happened both. Yeah. So, but we think it's the cleanest way to manage a lot of different counterparties.
Okay. Thank you, Fabrizio. I know that's a really tricky question, and you've done a really good job of kind of walking us through. So,
no, hope so. It's always very complicated. The reality for me, if I'm the buyer, all this is fantastic, but this is technical. There are ways commercially to manage it. You can work in the agreement where you will have benchmarking in the agreement. You will have requirement to be treated fairly. We also provide the customer with regular session where we actually navigate them through what we have done. And that helps a lot because in the end, it's a big relationship of trust. The route to market provider is in charge of practically all the revenue of the project for the investor. So it's normal that the investor will want to scrutinize how you're actually trading their position.
Mm-hmm. Okay, I'm going to change gears here and I'm going to go to a quick fire round, right? So you've seen a lot of assets come through your doors and I'm going to try and find out what that perfect asset looks like for you. So let's get started. Would you like a small asset, 10 to 50 megawatts, or large, 100 megawatts plus?
At the moment, we would prefer a large asset, say 100 plus we prefer, but
okay, and then short duration, so anything like sub 2 hours, or are you going long duration, 4 hours plus?
not plus. For us, it depends on the investor in the end, because the investor give us the asset to trade. We have seen a switch in 2025, quite rapid, from 2 hour to 3 hour, some 4 hour. We have contracted the first 3 hours.
And what do you want?
Doing modeling. I think it's probably a very good question. I would say at the moment, probably we would prefer a 3 hour or a 4 hour, but mainly because we have already contracted some 2 hour and 1 hour. So it's
Bit of variety in the portfolio.
yeah.
Okay.
Exactly.
Transmission connected or distribution connected?
The reality is that the assets are becoming more transmission connected compared to distribution. Just statistically, we are seeing more transmission. So I would say transmission.
Yeah, and you're 100 megawatts plus anyway,
Yes.
so you've already been selected for that category. Okay, lithium systems or something else?
Something else? Why not?
Something else?
But people continue to do the project that reach FEED, the project that reach final investment decision are all done with lithium ion at the moment. So.
Okay, and then in terms of the length of agreement, do you like sort of the 3-year terms, like a shorter merchant optimization, or something like a 10-year floor? Like what would be your preference?
We like both. We like both. We want to have a mix in the fleet. We don't want to have only one product. So for us, on these I can't choose. On these
Either
both.
way, okay,
Yes.
okay. And then is that asset? Do you want it to be going live in 6 months, or do you want it to be going live in 3 years' time?
We definitely prefer probably 1 month.
1 month. Okay, let's get this thing live. And then last question, do you want it to be standalone, so just a single asset, one battery per site, or do you want to do a co-located asset, so batteries and solar?
That's tricky. We really love both. I think that actually about 10% of our fleet is co-located. Now, a lot of co-location are going live really as we speak, or will go live in the next months. But we have a team that does also the power purchase agreement for the renewable part. So we really love both.
Okay. So let's wrap that up. So you want 100 megs, and then something that's 3 to 4 hours, transmission connected, new tech. I think you said either 3 years or 10 years, going live in 1 month time, and you didn't give an answer on standalone or co-located.
No, so we one and the other. We love both.
If you're one of those assets, then Fabrizio is the person to get in touch with. Okay, all right. Let's talk about a little bit more about co-location, because it is a key theme. We are seeing more of it. But do you think that we are sort of pushing that fast enough as a sector, or do you think we should be sort of saying, actually, you know what, these assets are better separate?
So you tell me, how many people came to you guys asking you modeling about co-location?
Quite a few, actually. People model co-location quite often. It doesn't get delivered that often,
Yes.
and I think that's a grid connection problem.
Yeah.
I think we've been a bit unimaginative in our connections planning.
I believe it's a mix. Well, I think you probably see more the technicality of it. I don't. I see more being closer to the investor. I see more the difficulty that some investors have in the risk profile of the two assets.
Yeah.
We've done the same journey. We've done a lot of modeling on co-location because everybody were driven by the idea these two class of asset, obviously they will offset. It makes perfectly sense to have a renewable and a battery. Yes. But you need to accept that these two assets are different, works in different way, and have different risk profile. Mm-hmm. You can potentially have more certainty on the pricing of the renewable. You will have less certainty on the pricing of the battery, unless you find someone who give you the tolling we were discussing earlier for a co-located project. Because otherwise, the battery, if it's merchant or if it's on a floor, it will be pretty much considered merchant from the investor point of view, and is exposed to volatility because battery is nicely exposed to volatility. This is where it makes most of the money and why it has bigger revenue. But these two class of assets, they are complementary. They can be very close. Mm-hmm. They are really different in terms of project financing and risk profile. So you need to accept that to actually deliver it. I don't think that a lot of people did.
So if I'm someone developing a co-location asset and I'm planning to come to you in a year's time, like what's the piece of advice that you would give me?
Speak with Ed. Please.
Great advice.
Spend your time speaking with Ed before. No, really. I think they need to be more aware of the revenue streams and how they work. If they come from the battery sector, probably is easier. And in fact, I think that some of the project we have contracted is done by people that are closer to the battery as a product, and they've gone for a co-located because of interest of the company in the co-location. When we have done the way around, speaking with renewable investor, the conversion rate has been a bit lower, because when they realize how purely volatile it is, it's more challenging for them to go through the line.
Yeah. Okay, that makes sense. With a 2 gig portfolio under management, you must be getting close to, or must have had, assets being retrofitted within that fleet. As an optimizer, do you care if something gets retrofitted? How does that work?
There's one element of the retrofitting that is a bit obviously, when they do the retrofitting, the asset disappear for a period of time.
Yeah.
That is a bit painful because we can't generate money, and for the customer and for us.
But you get a better asset at the end, right?
Yeah, exactly. So we love at the end, but for that time, okay, we have to tolerate that the asset is not there. It happened on a couple of assets, and but obviously we welcome it because the asset become better.
Yeah. Okay, interesting. And then we've just seen connections reform come through, and we have this wave of battery projects that want to connect. In theory, protected projects for 2026. In reality, maybe that'll be like end of 2026, start of 2027. We might get a big chunk of projects coming through all at once. How do you think about that? Like, are you kind of confident that you can bring on 2-3 gigs in the space of like a couple of years?
Well, we don't do it.
Of course. But you do manage it, right? You have to be in the processes.
Yes, but so yes, we start early in the process. If you want, we can touch base on the onboarding part, which is a particular aspect of it. I think that the biggest effort is with the owner, and the fact that they are able to manage all these projects and develop all these projects in the next months. From a route to market provider, 9 out of 10, we always work on greenfield. Mm-hmm. So we always have a sort of 12-month, 18-month delivery from when you contract. So we have contracted now, basically almost all the assets we will be managing between now and 2028. Mm-hmm. So we can absolutely plan the team, the resources, to make sure that we can manage it properly when the asset go live.
Yeah. Okay. Makes sense. Let's move on to my final 2 questions. So, first of all, is there anything you'd like to plug?
No.
Nothing? All covered? Okay, then let's go on to your contrarian view.
Well, not sure how you will receive this, but I heard in the market that actually there is Powercast. Do you know it?
I know. Yeah, I do know it.
It's a podcast done by EDF. It's better than Transmission, or at least it has better guests, I would say. You've been, I think, the first external guest we had.
The first external, yeah. You've kind of got me in this really awkward position, right? Where yes, yeah. It was great to come on Powercast. It was loads of fun. David and team, it's huge fun to come on and talk about batteries. And nice to be as a guest rather than a host.
If you're listening to this episode, go and listen to that one, because I think you gave a lot of good insight about batteries and how this year will go.
Thank you very much. That's very kind. I'm going to push you for a second contrarian view, because I feel like that one was just trying to
to plug something.
Yes, definitely.
As a contrarian view, I think I believe that there are a lot of super intelligent people in this industry. I'm not sure if these super smart people are doing enough to actually simplify. I think that this is where you guys have been a big game changer in the industry, in the batteries. A lot of people still love to keep it difficult, keep it very complicated, so that only them can talk the lingo. Instead, no, I think we could all do much better if we unlock it, simplify it. It will be easier for other people to get into this industry and do better in the end.
Mm-hmm. And when we think about the transition more broadly, right, we have to get people bought into this. So people within Westminster have to understand like what batteries are doing. And if we go around, I mean, present company completely included in this, but if we go around talking about EACs, then like the politicians, their minds will just explode. Yeah. And so we have to try and make it as simple as possible. So yeah, I love that. And Fabrizio, I'm going to wrap up by saying thank you very much for coming on. Let's check in a few years' time and see how that 5 gigs is doing.
Thank you. It's been a pleasure. Thank you, Ed.